Thanks, Dan. Thanks to the London VC Network for putting on today. Good afternoon, everyone. People, I need a little bit more energy than that. Come on. It's Thursday, 4-day week, sun shining, mega view. You've got the last panel, arguably the best, no pressure team. Good afternoon. More like it. Thank you, thank you, thank you. Hopefully everyone's had a really good day so far, made some great connections, learned a lot, and importantly connected with a few of the investors in the room. It's a really nice segue into what we're going to be double clicking on and deep diving into at the moment, or in this panel for the next 30-ish minutes. Investors. Obviously the title of today's panel is Where Are the Investors? Funding is critical. Everyone talks about funding, funding, funding. I think even Wu-Tang said, cash rules everything around me, underscoring its importance, right? And it is critical. We know it's what founders and startups need to get the oxygen for them to grow and scale their idea and opportunity. So going to be really looking forward with this esteemed panel to double click into all of that and talk at more length. For those that don't know me, my name's George Arnold. I've been working in the African VC ecosystem for the past 3 years, most recently with 54 Collective. Prior to that, I've been working with later stage investment shops for the last 7+ years on top of that. What I've taken away from all of that is innovation, startup, is where the most exciting bit of the food chain is, and it's the most fun, and working with the startups and founders day in, day out is great. So yeah, what we're going to do today is we're going to spend the next 30-ish minutes. I'm going to be in the hot seat asking my panelists some questions. We're then, for the final 10 minutes, going to hand over to yourselves. Please make sure you think of some really tough questions to ask. Don't ask me, ask these guys. And yeah, we're going to make it as interactive as possible from that moment on. So yeah, without further ado, I'm going to run down the line and let all of you introduce yourselves. You've got 90 seconds for a quick intro. I want to know 4 things. 1, who you are, which is very important. 2, I want to know your fund or investor that you're working with. 3, a little bit more about that investment thesis in 2 to 3 sentences. And finally, which is, in your opinion, the best country on the continent?
Cool. So I'm Niama Bassunie, manager partner at the Baobab network. So I joined the Baobab about 3 years ago, but prior to that, I spent 10 years building myself, so founder to investor. And what was the third question?
Third question, a little bit about your investment thesis.
Sure. So we're pre-seed, most often the first check, so we invest 100K, an accelerator format, but we don't think ourselves as an accelerator program. So the first 12 weeks obviously is sort of the demo day structure as in most accelerators, but more than that, we have sort of an operational team that works very closely with the founders, sector agnostic. We've invested in 16 countries, so one of actually the things we focus on, not to concentrate only on the big 4, sector agnostic as long as technology plays a role, and 51% of the cap table is African founders.
Cool, thank you.
Best country.
Yeah.
Morocco, just because I'm from Morocco. So.
Hi everyone, I'm June Angelides. I'm the founding partner of Levare Ventures. I also wear a couple of other hats. I started off my career at Silicon Valley Bank on the venture debt team. I also work with a family office called Samos Investments, and I'm originally from Lagos, so you know my answer for the last question. But yeah, we are investing earliest check, 100K into fintech, health tech, future of work, and B2B SaaS. Invested across Nigeria, Kenya, Ghana, South Africa, and Senegal now is my last investment. And yeah, I think that's pretty much covers everything. Really excited to be here.
Hi everyone, an absolute pleasure to be here. My name is Gbite Oduneye, and I'm the managing partner of ODBA. We're an early stage VC firm. Fintech, edtech, health tech, and logistics is our thing. We're pre-seed, seed. Our check sizes are 100 to 250,000. I'm proudly Nigerian, and without a doubt, I think it's the best country on the continent. Thank you.
Yeah, outnumbered. Thank you, team. All right, so since we're talking all things fundraising, I think we should look retrospectively back at 2024. Actually, to kick off, I'm going to flip it to the audience. Can anyone tell me which country on the continent raised the most amount of VC capital in 2024? Bonus if you know the actual quantum of capital that was flowing in as well. No one? I'm also using big deal data, so. No? Okay. Who knows here? Spot on. How much? 600 plus million, right? So in 2024, the VC ecosystem raised about 2.2 billion, a little bit down on what we've seen in 2023, and obviously subsequently down from what we saw in 2022. Big Four dominate. They always have. They do. Guys, is that ringing true for yourselves? Where are you seeing capital flowing into? Yeah, well, maybe we can start with you. Obviously, I imagine, given you guys have a semi-accelerator model, people, I assume, are applying to come and get funding from yourselves, given your first check. Yep. Where are you seeing most of that applications coming from? Is it the Big Four, or are you seeing markets, startups from other markets?
I mean, there's definitely a concentration in the Big Four in terms of pipeline applications we're getting. But we do make a concerted effort to invest out of the Big Four. That's actually one of our main targets. So like I said, we invested in 16 countries. And I think last year, we basically, it was like 3 or 4 new countries that we hadn't invested in before. Primarily, so Francophone Africa, we've including Cameroon. So we've done Cameroon last year, Côte d'Ivoire, and Togo, and like another country that we hadn't invested in before. So we're actually excited when we get applications from countries that are out of the Big Four. But obviously, there is a concentration around that just because of the nature of sort of, historically the ecosystem there and stuff.
Okay. And yourselves, you guys? I know Junie hinted at some of the markets you looked at. Senegal, latest investment, nice, exciting.
Absolutely, very jealous that Joe already went to Freetown, which is where my dad is from, actually. I'd love to see more deals coming from other parts of Africa. But as you said, it has to be more intentional. I'm not on the ground as much as I'd love to be, and I think we have to make the effort to kind of be there and make ourselves visible. And the talent is there. As Dami says, we're getting all this tech talent coming into the UK. And I think these are people who could be building really exceptional startups.
Peter, go.
Same sort of thing. We're seeing most of it from the Big Four. A number of firms. I mean, I suppose the bigger you are as a firm, or the more capital you have to give out, then you can, start exploring. I mean, we have done some investments outside the Big Four. We are in 13 African countries, but the reality, if I was to answer the question in another way, is so if it's fairly new, the first thing that happens is the money would go to the places with the biggest populations. I mean, it's almost like it's a natural development, right? That the first capital will go to the places where economies are big, economies are a bit bigger, the population is much bigger. Then the more we will start exploring other places. Now, when we explore these other places, you've got to bear in mind that you're not just going there to go sightsee. You're going there to go deploy capital. So if capital is on the down, deploying in other places becomes, it's not as straightforward. Another thing I always want to say, and not to be, but it's important that we all realize that venture capital is a business of returns, right? It's financial returns. We're answerable to limited partners, institutions who want a return on the investments we give. So it's more than just what I would like to do, or what my choices are. It's not necessarily on my capital. It's a supply and demand thing. We're reacting to markets. Of course, if I had loads of capital, I'd have deployed in Cameroon, I'd have deployed in Ethiopia, I'd have deployed in all these places. But the reality is, if I should ask, how many closed funds above $25 million exist on the continent? Sometimes I feel we're having the wrong conversations about these things, and it's not being a downer in any way. It's for us to move forward. We've got to be realistic. I'm very honest about the continent. I don't know this for a fact, but I'm sure if we go to, we don't have to go to, let's stay in the United Kingdom. Majority of venture capital is in London. Almost a good 70% of it is in London. there are reasons for that. So when we talk about Africa and we talk about these things, we should not talk about just our wants and desires. We need to talk about the reasons why things are the way they are, and tackle those things, right? And that way we would get to. So what I'm getting at is, I think we got here, and I promise not to hug the mic, right? I think we got here again. Yes, it could be faster and better, but again, a natural development. Capital came into Africa. A lot of capital came in 2021. I was having the conversation with my partner earlier on. I say we tell founders, all of us tell founders, that we've heard a lot of that today, that when you go into a country, you need local expertise. You need to understand, how the country operates. When capital came into Africa from the US and the UK, we didn't go to ask these questions. The local money, all the local people on ground told us, they made it very, very clear that your prices are overinflated, it does not make any sense, and it's the reason why a number of the high net worth individuals who have built businesses in Africa did not invest in our funds, because they told us that your prices are too ridiculous. They told us that these methods would not operate here, but a number of us being, I don't know, I wouldn't say, for whatever reason, you've raised the capital from abroad, you have the money, you have, so we completely ignored them. And now, 3-4 years later, everything they said, has come true. They made it very clear. Don't listen to what they're telling you at Oxford, Cambridge, Harvard, or Yale. There's some things you should take with a pinch of salt, but we disagreed with it. And we went ahead. And 3-4 years later, we're all very surprised that what they said was going to come to pass. So what I'm getting at is that a number of the things that we've gone through, I think is a natural progression. I think we've got to be, yes, we say these words intentional, but we really have to be, and realistic as to what is on ground. And when I say realistic, I don't mean to curb ambition or to destroy ambition. Not at all, far from it. Just real, honest conversations. And now we're beginning to see local capital coming on board, because a number of the new fund managers are not sounding 100% like fund managers in Silicon Valley or in London, right? You've got to change, you pick the best out of what is available, and you pay attention to what is on ground, and that way we will move things forward. And finally, I think someone said something with regards to China. A number of people say that when we talk about Africa. We know what the Chinese did with their economy. Are we prepared to do it? Are we doing? The Chinese didn't just talk about things; they put things in place. They did a number of things that we're not doing. So when we compare, it's a bit, it's not apples for apples. It's completely different. We have chosen a capitalist path, and they have chosen another path. So I think the more intentional we are in really working out what the problems are, I think we would see a lot of progress, which we are seeing, by the way.
I think it's a really interesting point where you speak to that tension that we as investors have from our LP base, right? Where it's commercial returns, we want to see commercial returns, where those going to be coming from. And it's obvious, as you say, the sort of natural progression of the big four having those opportunities. However, there's some LPs that are very keen for you to be mobilizing and investing into other markets. And just before I come to you, June, one of the points that you were mentioning is we need to do a better job of catalyzing more to take that risk into supporting the local ecosystems. That's key. But I'm curious from you guys, how do we do that? Is that with Baobab and stuff, Kate, writing those first checks?
Yeah, sure. Oh, sorry. I think just to kind of jump on something you said, I don't think it's about desires and wants. It's a commercial model, and I think it does make strategic sense to invest outside of the big four if you take regional approaches. So before joining Baobab, like I said, I built a company and we had operations in 5 Francophone African countries, and it can make a lot of sense as a region, right? You can start somewhere smaller. It allows you to iterate, it allows you to find product market fits, as long as you're intentional on your expansion strategy. I think being outside of the big four can make sense. I think the Francophone Africa region is very interesting. It comes with, for example, lower risks when it comes to currency, as we've seen lately, offers some sort of diversification. So I think even as funds or accelerators, even towards our LPs, actually giving that kind of diversification strategy is thinking about it commercially. So I think it can make strategic sense. It's not only about catalyzing an ecosystem, it is, yes, and we end up doing that, but for commercial reasons.
And is there any other ways that you guys think that we should be mobilizing more of those local investors in those markets and taking that catalyst approach into them?
Well, I think this is something Crystal said earlier on, so I'm not going to pass it as mine. But it's, like I said, with a natural progression, right? That if we really think about it, 5-10 years ago, the amount of capital coming in was non-existent, right? So yes, it has slowed down, but we're still on an upward trajectory. I have nothing against that. Like I said, I have invested and we continue to invest. Huge fan of the amazing stuff Toby and the rest of you are doing. But so you've done loads of companies, and that's what I mean. You've been around for a while. You started off with the top 4, and then as you got bigger with more experience, you expanded. And that's what that's what I call a natural progression. What I'm getting at is that the amount of capital, it's not all of us, not everybody can do that. And that's what we all wish to do. We're all gradually doing it. But there are reasons why it's that way is what I'm getting at, right? It's not that we shouldn't invest. I'm saying the reasons why. The first thing that happens is you go to where you think is you're going to be most profitable, you're going to get a return. And then after that, you then start to go out. But back to the question, I think it's happening now, right? With people like Dream VC, London Venture Capital Network, a number of people are doing things which is enlightening people on ground, right? They didn't particularly understand venture capital. Like I say this, it's something I say all the time. A number of the billionaires in Africa raised probably $100,000 to start their business. And they went, and it took them years, and they built billion-dollar businesses. So when we showed up in 2020 or 2019, looking to raise $3 million at a $10 million valuation with T-shirts and jeans, you've got to understand why the high network individuals were completely confused about what it is we were doing, right? Meaning that it took a lot of education, making them understand. So the first bit, what was going to happen is the foreign capital came in, and like I said, we ignored the local guys that have been building businesses there for the last 100 years, right? So something happened in the first time. Well, they got to understand that the young people in Africa can build phenomenal companies. Not only that, the foreign capital will back them. So maybe it's something we should look into, which is what is happening now. Their major problem was the valuations. You know, their major issue was, you know, again, something I always say, we always do this, right? Currency devaluation has been happening for the last 30 years, every 4 years without fail. But we always pretend like it's something brand new. You know, it's really amazing. And this is what I mean by if we start being intentional, we'll stop repeating ourselves. Currency devaluation, what country in Africa? Every 4 years without fail. Maybe some will pass 5 or 6, but it's a certain. It's more a feature than a bug. But we talk about it, oh my God, you know, like we're surprised. And that's because, like again, we're not being intentional. So it's happening now. Dream VC, we're enlightening the investors. They can clearly see that there's something there. They understand technology now, and they're getting more and more involved, which you know, it's the education, the communities, it's growing. So we're getting there.
Yeah, I think that's a really important point, right? Is we definitely, and from my perspective over the last 3 years of doing quite a lot of fundraising, it is really keen to see more capital flowing in locally to support and have that positive feedback loop impact on the startup ecosystem, right? We need those who have been successful entrepreneurs, successful business people who've made good money, not be invested in Dubai or London or New York property or schools or whatever, stick it back into the ecosystem, right? So, and then I think it does have that sort of knock-on effect into other markets as well, because, you know, Nairobi or Kenya gets saturated, people will be looking at opportunities in Uganda, Tanzania, etc. So I do think that takes place. And shout out to London VC Network, Dream VC, as you said, for helping to build up that understanding and familiarity. Now, but taking a step back, and I'm curious for the impact of this for yourselves, is obviously you mentioned that a lot of the LP capital that funds us funds is overseas. Are you guys thinking through your strategies given all of the uncertainty that's happening overseas? Are you getting a little bit concerned about all of the wording around tariffs and everything? You guys rethinking through or not impacting you? What's your thoughts on the ecosystem there?
I mean, I guess the reality is everyone is a bit on edge. Mr. Trump is a bit unpredictable at the moment. But, you know, I think we just kind of have to power through. Businesses are still being built. I think It's a global sort of phenomenon at the moment. I don't think Africa is sort of any different when you think about. I mean, ultimately, majority of the companies we're investing in, their home markets are sort of their focus. So, for example, Chowdek, focusing on Nigeria. We're not yet at that stage where we're worried about tariffs. I don't know if it's similar for you.
No, I think it's what you said. Essentially, the whole world is on edge, but it depends on the types of businesses, right? So if you're involved in cross-border trade and global supply chains, then potentially these are things that can impact you. So I think it'll be in a...
And you're thinking through your investment strategy on that, so looking less businesses like that, or?
Not necessarily, just because, I mean, when we invest, it's a long-term vision, so a lot of these things will, we're not...
Cyclical?
Yeah, exactly, cyclical. So, no, I think if the fundamentals make sense and it's something that we believe in, and it's, at this stage it's so early that you're fundamentally backing the founder, because you start with a company today, it looks different in 3 months. So I don't think we can get sort of stuck on the macro today, based on how we invest and kind of what we look at.
Founders, you heard it here. They're flush with cash. Come tap them up after. So from your guys' objectives as well, where are you seeing most of the funding flowing into stage? Obviously, across the board, there's very much concentration from everything from sort of like pre-seed to seed, I think is where we sort of tap out. Are you seeing that there is a concentration of other investors in the ecosystem looking at that stages? What's missing? How do we get more of what's missing to come to play?
Yeah, I guess just, going back to the general sort of sentiment, we're all a little bit more risk averse, and I think that's a fact, just given that there's just more at stake. If you think of your average emerging manager, there's more to prove. We want to encourage more capital to flow to the continent, so that kind of means you have to be careful with every single check that you deploy. You want it to be a winner. The process is taking longer. But I think more importantly, I'm seeing more of a shift of funds that predominantly were investing at pre-seed and seed are moving a bit later down the line where there's more metrics to track. So that means that the earlier stage founders, I think, are finding it a lot harder to raise. And I think this is where the angel syndicates are really coming into play, the accelerators, the incubators. They are doing a bit more of the hand-holding and then filling that gap. I think we're starting to see the local angel networks start to come and bear fruit, because I think they've realized that, everyone's see, they say shine your eyes back home. But yeah, ultimately, the prices have come down. People are being a bit more realistic about, what they're willing to accept in terms of valuation. I think everyone kind of had their blinkers on in terms of what was realistic.
Well, yeah, I concur with everything you said. I mean, once risk has been heightened, which Trump has done, of course, money will flee from pre-seed seed, right? It's Africa, of course, money will flee straight away. Then, pre-seed seed, everybody's looking for something that's more. And this is not just Africa, right? A lot of the funds that were raised has been raised by the biggest funds in the world, right? Because money is going to where they think is comfortable. So risk assets or new managers or new jurisdictions will suffer as a result. It's not necessarily, in not trying to be positive in a negative, but I mean, it's all we can do, right, in a negative. I think what it has done has also, as part of that investor education for the local investors, what it has done has also provided them with the opportunity, or made it very, very clear for the founders that would have normally ignored them, to really double down in enlightening them, to try and ensure that they start opening up their purse. Of course, they would want different things, and in between them wanting different things and us partnering with our foreign LPs, I'm sure we will come up with some sort of strategy or thesis that really works for the continent. But it is difficult. That's just the truth of it. I know they're bigger, stronger. They've been around for longer, but it's tough, man. We're trying to close the fund. It's difficult. The one thing you don't want if you're a founder or investor is, you've pushed someone to a certain point. You've done all the things right. You've got him where you want. Is it a yes? Is it a no? And when Trump does what he does, the one thing you don't want to hear, which we're hearing a lot of now, is come back to me at the end of the quarter. Let's see how global things are at the end of the quarter. So it is a bit difficult if you haven't closed your funds. Investors will sit on the fence, but there is an opportunity. I mean, especially for a number of African investors to fill in those gaps. And when they do fill in those gaps, like I said, they're going to be demanding a number of different things that the foreign investors will demand. And I think through all that, we will come up with a structure that works for Africa. And one more thing, I'm really sorry, guys, right? Because a number of people have said this, does venture capital work for Africa? I mean, it's just, not to be disrespectful, what a ridiculous question, right? Well, I think what is happening is that we're trying to use venture capital to solve all of Africa's problems. That's the issue, right? When we talk about venture capital in Africa, we talk about it as, let's democratize this way of investing. We forget that it's arguably one of the riskiest investment forms on the planet, right? So it comes with heightened, excessive risk. So if that's the case, there are only a certain sort of business that venture capital should follow, right? And I'm sure there's a number of phenomenal founders and fund managers that can navigate currency fluctuation. They understand the different parts in the market where if they think they park their bus, they will still generate very decent returns. And those are the sort of companies that venture capital will go for. It's not for, we say it all the time, it's not for everyone. But obviously in the hype and in the capital that flowed into Africa between that 2019 till 2021, it just felt like it was the natural cure to all the problems which we have. But does it work? Of course it does. Even in a very difficult environment, we've been able to build unicorns. Yes, we've not exited any of them, but it's only been in Africa for about 10, 15 years, I'm not saying that we don't want to use it as an excuse to say we can't do better and things can't be, but we've got to put things into perspective. And I think eventually it's a certain sort of investor that would invest in venture capital. A certain sort of investor will invest in venture capital in Africa. And I think that investor is coming, as time goes on, he's coming to the table. We will get there. It's just taking a bit longer than normal. Although I do think it's been a natural process, I think.
So it's a big question that you threw out there, Gbite, right? Does VC capital work in Africa? I think fair when we look at it, right? And you can argue that VC has not really returned much capital to its LP base. And just like Founders FYI, we're always dealing with that question, right? And so you hear that E word, it was dropped in the discussion before, exits is key. Obviously, right, our LPs want to be able to see the returns. So hence why we're always putting pressure on you guys, like, what's your exit strategy? What's your exit pathway? But we need to do a better job of driving those returns back and working closely with our founders and portfolio businesses to do that. But circling back to our question that we're asking ourselves today is like, where are the investors? June, I sort of wanted to come back to one of the points you mentioned there. You're talking about angel syndicates, they're stepping up to play. Well, you actually said two things that I want to tap on. One is that. Are you guys working quite closely with them? And like collectively across the board, how are you like getting into them, working with the networks? How are you converting people to doing more angel investments because they're such a critical part of the ecosystem?
Yeah, Levare is an angel syndicate.
Great.
So it's essentially high net worths and some VCs who've clubbed together to invest in African startups. And I guess because I have the other hat of working in a family office, I see it as patient capital. That's the kind of perspective with which I'm going into all my investments, because I just think it takes longer. And I think it's important 100%. When we talk about how do we get to the exits, I think, well, we just need to give the companies a bit more time. It's a more nascent ecosystem, and a lot more has to be built by the founders, unlike their counterparts over here or, anywhere else in the world, really. You hear half the stories and you're like, oh my goodness, you're building all the infrastructure. And that shouldn't necessarily be their challenge, but it is. It's their reality. So adapting the model, the VC model, I think, to the nature of what we're working with on the ground, I think is really important. So yeah, I think there are more syndicates popping up, but there are more angels globally who want to invest in the continent, and the founders are finding them.
Yeah, I would also argue that we need to see some more follow-on capital coming through Series A, Series B stage, and those growth investors. Are you looking, like Baobab, are you guys having an active role in sort of managing that investor value chain and engaging those investors, lining them up? I would argue that we need to see more of that in the ecosystem. We need to be collaborating across the full spectrum of the sort of like funding cycle and working from your capital markets all the way backwards to the early stage players like us. How are you guys going about that? How are you solving it?
No, absolutely. And, one of the, I guess, support that we give our founders is to support them with their seed, Series A, and sort of going forward. But, it is, I guess, the part of the value chain, if you think about it as a value chain, that is, that lacks quite a lot of funding. And we've seen it in the last, I guess, couple of years. It's the one that was the most impacted by the pullback of capital. So absolutely, I think it is something we need to collaborate on. I think, both locally and internationally. Globally, there are investors that we've seen come into some of our portfolio companies where it's their first investment in Africa. So once again, it's still very nascent and it's going to take time. And as more successes come about, we will have more investors with deeper pockets that can come into the Series A's and B's and further growth capital. But fundamentally, yeah, it will have to come at some point locally, and that's going to take a lot of time. Yeah.
Like I said, I think it's for us to create these pathways. Like 4 or 5 years ago, if I spoke to any founder, any African founder that even in Africa that was living in Britain, America, or even in Africa, and I said, would you list on any African market? I mean, he would laugh at me, right? Because everybody wants the exit on the NASDAQ or the AIM, the NASDAQ or the FTSE, which is fair, right? The best should get the exits on the NASDAQ or the FTSE. I tell a number of Africans that if you go through the top 50 richest men in Africa, all the billionaires that you know, that you love, all their companies are listed on African markets, right? I just want us to hold that thought. All of them are listed on African markets. When I'm having the conversation today with a number of our founders, a number of them feel very different. I'm sure we've heard Flutterwave flirting with the idea of listing on the market, on the African markets. Now, I don't think it's going to take as long as people think. I think at some point this year or next year, we would experiment it. We have a couple of people in our portfolio that have the appetite. Yes, it might not be a $500 million company. It might be a 50 or 70 or $100 million company. But we would do it. And I think the time the first company lists on an African market, yes, it might not be the appetite of the foreign investor. You would think, can I just remind everyone that foreign portfolio investors have been investing in the Nigerian Stock Exchange since 1960, and they still invest today, right? So it's and this is what I mean, right? It's not the job of the foreign investor seeks a return. That's strictly what he does. He's looking for a return. It's unfair to him for him to be the one to build how we can attract more capital. So it's for us. So we will think about some of these things. And I kid you not, the first $50 million company you will see listed either in Nigeria or in South Africa, yes, some will laugh at it, but I believe more and more will. It will come to the point where success doesn't have to be a $1 billion company. Success is a $50 million company if I invested at 2.5 million. Success is a $100 million company. And these are the things that will begin to change, and people will begin to look at it very differently. But I don't think it's going to take that long. If we don't see one this year, I assure you will see another portfolio that will list on one of the African markets next year. Now, would it do phenomenally well? We hope so. If it fails, well, fair enough. But my point is, we cannot be scared to try new things. It's the only way we unlock this capital. It's the only way we get foreign capital to look at us differently. JP Morgan, Goldman Sachs have invested in all African stock exchanges for as long as I can remember. They will invest in a fast-moving technology company that's worth 50, 80, or $100 million that's listed on the African markets. And I will repeat, 80% of the richest Africans have all their companies listed in Africa. Don't forget that.
I like that as well. Don't be scared. Take risk. Turning to the audience, before we dive into Q&A, I wanted to see how many of you are founders or want to be founders. Raise your hands. Okay, so quite a few founders in the room. Panel, what are you, given everything that we've spoken about, given everything that's going on in the ecosystem at the moment, what is, to you, the two key things that founders should be focusing in on to successfully fundraise on their next fundraising journey?
I think because of just the nature of capital raising being more difficult in this phase, so a couple of things like that we look at are essentially a founder problem fit, and the reason is because there is less capital that is, compared to 2019 and 2021 and whatnot. There is a bit less time and more of a need to sort of bootstrap. So your knowledge, your insights from whatever it is, whatever problem you're resolving, I think can go a long way than getting something really new and trying to iterate on it and not. So it's something we look at. It's not sort of the only defining point, but I think seeing a founder who's had that insight and there's a match between the founder and the problem makes a lot of sense at this stage. And obviously the key word that everyone says and very difficult to measure is resilience. Very hard to sort of kind of, I guess, measure that with any founder that you meet in a few interactions. But fundamentally it's asking a few questions here and there and trying to understand the history and the background and whatnot. I think resilience, I think if anything, things you were talking about earlier is about managing expectations, right? So there was a period when capital was a lot easier and valuations were super high, and I went through that as a founder myself and raised in those valuations and whatnot. And obviously things have changed now, and I think there is a set of expectation management that's happening, but it is also attracting the right types of founders in many cases, because these are founders that are committed. It's in a difficult environment, and often constraints and difficult environments will be catalysts for innovation and for commitment and for that kind of resilience. So I think it is a difficult period, but I think it's going to probably generate one of the best founders that we'll see in Africa.
Yeah, and just building on that, I think for me, what I really think about a lot is, obviously we've got the founder, but the team, because more than ever, you need to be able to execute with sometimes very, very limited resources. So I'm really, looking to understand sort of what have you managed to build so far, and then also just a very clear plan as to how you're going to get to, your first 100,000, your first million. I think we want to know how you're making money. I think gone are the days where you can kind of hope to go from raise to raise. It has to be very, very clear that you're going to be able to have your ideal customer, and who that is, how to find them. So actually strong networks as well is something that I look for, and I think now more than ever that's really critical, because customers matter, money's everything.
Cash rules everything around me.
I think they've said it all, really. I think, it's unfair to a certain point, because a few years ago we were saying just build, right? Build and then you get big and then you monetize. And now we're saying, show me your route to profitability. We want a lean operation of some sort. It would be nice if you have some sort of expertise in that background, if you've been in financial services, if you're raising a fintech or health, right? So yeah, it's the same sort of thing. So that's what we're looking for. But I think as a result of these downturns, I think for some reason, and I'm keen to find out, because you're African focused funds. Do you think we all sound the same? And what I mean by that is right? No, well, yeah. That do you think all African VCs sound the same? And the reason why I say so, and I think right there is part of the problem, right? Because if I'm in London or if I'm in the States, one VC is completely very different from another. I mean, one VC is not uncomfortable saying that I'm not investing in you if you're not in. If you live in New York, I'm not investing. I only want to invest in companies in San Francisco, right? What I'm getting at is that even as allocators that we go and convince LPs to give us capital, we shouldn't be scared to come up with what we truly believe in. If I only want to invest in a founder that it lives in Africa, that if the guy doesn't live in Africa, I'm not investing, then you should be able to do that, right? You shouldn't be scared to do that. And to answer the gentleman from Food Llama, the reason why we all sound like that is because even ourselves, we're not being, we say a number of things, but we're not carrying it out, right? Because if we do have that conviction, then I should sound very different from how someone else sounds, right? What I'm looking for in an investor should be very different from someone else. I should be able to conveniently say that, I'll wrap up in a second there. I should be able to conveniently say that if I want to, if that's my belief system, that I just want to invest in people that have gone to Stanford or Yale or Harvard. And the reason for that is because I think they have greater connections and they'll be able to build their companies in Africa faster. If that's what you believe as a fund manager, then that's what you should say. And those sorts of people will come to you, right? And then 5 or 10 years, we have some data. We all have data to see, what was her thesis like? What was his thesis like? And that's how the ecosystem develops, right? It's by trial and error. And I do think it's happening. I just hope it happens faster. Thank you.
Dan, do we have time for a couple of questions, or is that like a hard stop of wrap-up? One question. You raised your hand fastest. No pressure.
Thank you. Thank you for going ahead of us. I am an emerging fund manager and also an angel investor, so it's very interesting to get a perspective. And I'm based out of Africa, so of course, raising is hellish. If it's hellish for you when you're sitting here, like
I'm in Lagos.
Oh, I'm in Lagos. Oh, I feel for you. All right. So my question is: yes, we've talked about local capital, we've talked about the angel syndicates, but what's your view on CVC, on the corporates actually coming in? Because I think those are people that haven't yet. That's an institution or entity that we haven't thought about bringing in. Sunchart has its ventures based out of Hong Kong. Yeah. So there are a couple of financial institutions that have started with CVCs. But what are your thoughts on that? Because I really think that's capital that's sitting that could be deployed on the continent.
Well, it's happening. It's happening now, and like I said, it's a natural progression, right? It's happening now because if you think about it, that's you thinking about exits, that's you thinking about customers for the companies that you do invest in, that's you thinking about a partner, and that only happens after we get through the first step, right? Which was the first step: money coming in, us understanding things. Initially, when we're speaking to these CVCs, they saw these startups as competition. Right? In the early stages, they saw them as competition, but nobody they want to work with. But now we are seeing that happen. People like Dream VC, I think LV's London Venture Capital Network too, are doing a lot of work in that aspect, in enlightening companies why it makes good sense for them to partner with startups. But it is, from what I'm seeing, it's beginning to happen.
Happy to comment because we had raised a bit of capital from corporates. It's always interesting. Yes and no, right? So the CVCs are super interesting, great. As a founder, you need to be really, really aligned to what that corporate is looking at, right? And in a way, you're going to be pulled into what that corporate wants to see as your strategic investor. So you got to be pretty aligned in terms of where they're going and where you're going. And really, you are looking up for an exit, and that exit's going to be into them, most likely. And that's great. There's capital flowing in, but obviously that also does distort the market a tiny bit. So that's one. Two, I love it when corporates come to invest into funds and take that risk so they can sort of spread and work with a variety of portfolio and startups. That's hard to find. There's only a number of corporates out there, from my experiences, that have set themselves up to be able to invest in that way. A lot of them are investing off balance sheet, and if they're investing off balance sheet, they're worried about everything going on in the ecosystem at the moment. They're like, ooh, do I lock up my capital in a 10-year, probably +2 lifeline fund, right? Maybe not. And it takes a lot of time to convert them over to being those LP investors into your fund. And there are those out there, and those that are great, and they're great partners to work with because you're also able to benefit from their distribution networks, which is obviously subsequently beneficial for your founders and your portfolio businesses. They are growing, though. I am seeing more. There's a really interesting network called the Global Corporate Venture Network, something like that. They usually do an annual gathering in California. And there's a growing interest from all of those CVCs who get together to do more on the continent. So I definitely do think that it is a vertical to be keeping an eye out moving forward.
Same.
Cool. Sorry we ran over, Dan. But thank you to the panelists, and yeah, thank you for today. We'll be hanging around.